2 o'clock on the second day of January. It's the Crypto Sniper giving you an update. Yes, that's right, giving you an update. We promised that post the Christmas New Year we'd give an update on somewhere where we reflected a different opinion. We talked to you about Bitcoin. Did it go up or did it go down? And another token which we'll be covering as well that you can have a look at, that's doing really, really well and is well set up to go further. This is what we're going to handle with you in the charts right now. Let's go first to the God market and go straight up. Bitcoin, Bitcoin, Bitcoin. There she is. Now I'm starting right up on the 3-day time frame. 3-day time frame, just to highlight some of the big levels. You see, we're the only ones that do key levels of significance. We told you about 42.5. I'm going to go into 42.5 and prove to you exactly why. That was the key level. That's why you've been pausing for most of a month, literally from the 3rd, or was it the 6th of December? I think it was the 3rd. Literally, we're not far away from the 3rd of January. Most of the month, not much up, not much down, pause. Typically known as progress decay. Why? Because a key level of significance was made just after a major technical target was made. No further real significant upside. You did go a touch higher, but you pull back and you went a touch higher and you pull back even more, and then you went sideways, sideways, and a bit down, and it's all been a little bit of chop and churn, and people lost the faith. And some people, big technical analysts, said there is an RSI divergence. So we'll have a look on how that's turned out as well on both the Bitcoin and that Ethereum would also go down. We'll have a look at all those and more. But let's go to these charts and do the draw. What were the key levels? 47.5, we'll be coming back to that. 42.5, we've already mentioned. 25, the big turn. Then we had that dollar strength period, not once but twice for a sustained basis. It had us lose confidence in our bullishness. Why were we coming down? We should have looked a bit more at the dollar. The dollar was leaning on everything during that period. Of course, there was a pullback in the stock markets happening at the same time, and the yields were going up higher. There were a lot of macro going on. Many people don't think macro matters. Macro matters. The absolute turbo juice for Bitcoin and crypto comes from the quantitative easing on the macro side, the liquidity side. When liquidity is taken away, the same people are losing their liquidity, have to sell their cryptos. Anyway, we'll get more onto that. 25, that was a key level. Then you got our target that was run, that was 40,300, and we said you probably overperformed to the 42.5. Don't forget this key level, that was your low, your targeted low that came out of that head and shoulders that was in here. So that's a lot of stuff I've recapped before. Let's get straight into the new stuff. I'm going to drop you straight into this piece of price behavior right here. And let's go and put on our indicator, and you will see that there was a very key moment, and I put it in the orange box. Spot the orange box, spot the orange box. What is the important part about that orange box? Why is it significant? Because you were dovetailing around, you guessed it, that key level of significance, 42.5. In actual fact, the departure from the stall box area, let me just spread that a little bit. Oops, we got the lock on. Take the lock off. It's such a pain. Take the lock off. Take the lock off. If you have a look at the pivoting around that 42.5, it actually made me a tiny bit nervous, truth be told. It's actually, the key levels of significance theory is even better than I even expected. It was too good to be true that I was like, what's going on here? What's going on here? And it was exactly what it was. And sometimes you need retrospect to actually recognize the fact. Retrospect is you broke from the most significant key level of significance, 42.5, when you left this stall box area, and you didn't trade much above it. You went 42.9 and you went below it to 42.1. 42.1, 400 below. 42.9, 400 above. Remember me explaining that? Remember me explaining that for other parts of the price behavior? Remember it over here. We can draw again for you. Over here, let's just see, draw. You had it here with the H1, and you had it there with the L1. By the way, where was that L1? Where was all the support coming from? Hammer here, massive rejection to that first spill low, more rejection here. Where was that all coming from? You guessed it, that target at 40,500. It was 46 on other exchanges, 45 a tissue on Binance. But you could see there was very clear support between 40.5 and 42.5. That was roughly 2K. And where did you end up here? 44.5, 44.5, 44.5. 2,000 above, 2,000 below, 2,000 above, 2,000 below. That was where you were sine waving. And eventually you went back up there again, only this time you didn't dip as deep. What was that showing you? Bid was coming up and under the market. Bid was coming up and under the market. Hammer over there and one over there that I've just obscured. Lots of terrible lines that I'm putting all over the place. Squeezy, squeezy, Japanesey. Yes, that was what was going on. Volatility and patterns and the price itself and volume before RSI, divergence, and everything else that people want to do that is reconstituted mathematics on price behavior, because they're lazy to read the actual price behavior and all the gifts it's giving you. So they want some nice smooth wave that they think makes it more predictable and more reliable about the future, because they don't want to look at the candlestick analysis. They don't want to do the work on the raw data. They want some other level of production, like the food market chain that contaminates, refines, takes all the good bits out, drops some chemicals in. They want to eat that. They want to eat that, not what comes out of the soil. Out of the soil is dirty. You've got to wash it. Oh no, don't let me eat food from out of the soil. Must eat food from factory with E numbers that someone else has produced, smooth, done nice things to, for me, especially good. Okay, so I'm having some fun. It is the new year. We're talking about crypto. So this was clearly the pivoting point, and it was over the dollar's days. People go, oh, but yeah, it was Christmas Day. It was New Year's Day. Of course. Can I tell you, funneling and going dull and quiet around a key level of significance absolutely typically occurs around the key level of significance, and usually on holiday, dull days, weekends, etc., public holidays, etc. It is, where does the market find a point of common acceptance to rest? That's called the key level of significance. And when you learn key levels of significance with us, you see it runs through the price behavior. You all just get support and resistance hammered into you. Support, the line below and the line above. Support and resistance, taps handsome ball head, too beautiful a head to hide with hair, as an example to show you what support and resistance. Sometimes the real power is the sight in the eyes that runs through the price behavior. That is the key level, 42.5. That was your break. The break triggered. That was your triggering event candle right there. Beautiful people. Out of that box, where did it break from? The really tight $400 little squeezy box around, you guessed it, that level that no one else gave you. That level that nobody else gave you. Again, I asked the question, how many people 2, 3, 4, 5 weeks ago, even when we just pivot back, okay, we're comfortable, bull, the ETF story was pumping Bitcoin, I mean, the key levels was the target at 40.5 with the run through to 42.5. No one else gave you that level. You've stood since that high. It was December the 8th. You were making mostly high. You broke into this whole range here at around December the 4th. And since then, it's been up, down, up, down, up, down, frustration. Had you been carrying a lot of leverage on that, you would have paid for time with financing costs and achieved very little. You would have been adding on the tops and panicking out on the lows. Adding on the tops, panic. That's what people do without method. I'm sorry, it's the truth. Adding on the higher parts on the range. That's it. This time we're going. Guessing in great hopium. No. Squeezy, Japanesey, 3 impulses, 42.5. If you're to enter, let it do its volatility thing until it dissipates and settles around the key level of significance, and then you go long on the break of that level. You could have had a long at the 42.9, and you could have had your stop just there on the 42s. You could have had a $900 stop. You could have had a $900 stop. You could have gone long. You could have gone long at the 42.5. You could have had a $500 stop. Oh, where's it resting right now? Do explain, Francis, your random method that just seems coincidental largely. You're just, it's just a placebo pill. Why are we doing a shooting star just there? Oh, your tool that drew the second interim level seems to show the market slowing down there and a resistance and a pullback star. Guess what happened this morning when everyone woke up? Bitcoin's pumping. Buy Bitcoin. Entries, here's the entries. Retail entries, here's the retail entries. Here's the retail entries. Here's the retail entries. Washout. Coming up, a little bit of a washout. We are in an HVF breakout. They don't have to be big. That is a shooting star, shooting star, shooting star. Don't you know you are a shooting star? I think there was, someone tell me, who sung that one? In the comments below. Must know, must know, must know. It's American. Where's our American friends? It's the 2nd of January. Don't you know? Was it Bad Company? I think it might have been. Anyway. So pullback time, but where do we go? What does the target say? The target says on the amazing tool currently being beta tested, 46,955, 46.95, which is 47, and we have a key level of 47.5. Isn't it funny how they cluster like that? You know, more coincidences. The shooting star at the second interim, the pivoting by $400 around the 42.5. This guy's just a lucky guesser. Man, he's sometimes such a lucky guesser. Fluke, fluke, fluker, fluker, fluker. Anyway, yeah, so we go. It is the new year. We've got to keep you entertained. We've got to laugh sometimes. Why the hell not? We're fluking our way to wealth in 2024. You can do it too. Hit that link in the description below and book yourself a call. Friendly, nice, no pressure. 14-day money back, you name it. If you don't want to be there, we don't really want you. We don't have to have you. We love to have you. That's how it works. It's a community of the willing. People who really understand. A single trade like this actually pays for your year in one off. And then you get everything else on top. That is maximizing your returns in a bull season. Largely, we have continued to assert it was a bull season, apart from our point of concern during the dollar strength period. And others did say other things because they have wrong reasons for it, generally in our opinion. So when we had a look at this vid, let's get out of it. Hold on. We were looking at the opinion technically of the triple price RSI divergence. So that was recorded. We recorded our response 12 days ago. So I said roughly in 10 to 12 days, probably during Christmas to the New Year period, we'll be updating. We've done a part update on this. During this period, what was Bitcoin? What was Bitcoin 12 days ago? Well, let's put it on the daily chart and find out. Daily chart, talk to me. 12 days ago. So we are today 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So around here, 12, 42.5. And what are we today? We're higher and looking perky and, in our opinion, going to run that 47.5. That's not a very good show of the chart, by the way. Let's, TradingView has its own ideas of how to frame things when you've got lots of jaws on. So as you can see, this has resolved to the upside rather than be intimidated by a divergence, a 3 RSI divergence. Anytime you cease going up, there we go, you can see it. You can see it, 42,000. There was the price, 42,055. And you are today on Bitcoin higher. And you would have been shaken out on your 45,338. You would have been shaken out on an RSI triple divergence. It's done it 3 times, you know. You should really be paying attention. It's like your mama said, don't eat that chocolate late at night. You won't sleep. You get a runny tummy. Oh, she said it 3 times. You didn't listen any other times. It's got to happen. You've been warned 3 times by the RSI divergence. Why didn't you listen? Why didn't you take your money off? Why didn't you panic out? It was 42,000 and now you're looking at 45,000 going on 400. So it's 3,400 up despite telling you 3 times. What did it tell you 3 times? Actually, not very much of any great use at all. What it said is you aren't going up as fast as you were once the ETF was announced compared to how you're going up now. And actually you're forming a pattern, which is a continuation pattern at a key level that wasn't mentioned here. It wasn't mentioned anywhere else. So in our opinion, we would say, and one case does not prove a point, on balance of probabilities, we continue to assert indicator-based trading is not going to build your wealth. It's going to take you out of bull runs, according to one of the most followed technical analysts. It's going to take you out of bull runs, leaving money on the table. Remember, we're expecting 47.5. We've also shown you on a bigger time frame that you'd be looking potentially at 145,000. It would have taken you out of Bitcoin. People are getting out of medium long-term time frames based on mathematical formula basically bringing down a rate of change. In other words, the acceleration of a move. Bad idea in our opinion. Don't play the man, play the idea. The idea is bad. Man is doing his best. And he thinks he's got a possible insight. Sometimes we do. Sometimes I think I've got a possible insight and I'm wrong. Sometimes the insight's wrong, but the logic's right. Sometimes the insight's wrong and the logic is wrong. There's a difference. You don't want positive enforcement for bad behavior. You don't want positive enforcement for bad behavior. Price, then patterns, and then volume are your best indicators of the future. Spend more time reading the chart, not reprocessed other ideas. There was also commentary on Ethereum that pointed to Ethereum. That was our take on the patterns. Pointed on Ethereum potentially going back. Let's move across. Ethereum. That was also going to be going down as a result of it being supposedly in a rising wedge. There's our ETH. Let's see if we can get the opinion that was voiced. It was in this video as well. Here it is. It's just below. All the while, upper boundary of the rising wedge in ETH continues to provide resistance. ETH is a rising wedge, not an ascending triangle, although rising wedges can become running wedges. What does that all mean? We can only assume that he was warning of something bearish. We will go to Ethereum and talk to you about Ethereum, but are we finished with Bitcoin? So remember the macro, if we go back to the weekly, just to give you a big ass view, what were all the orange lines around? Well, you got your monarch inverted head and shoulder, the first in a new trend that has performed to target 40,500. You are now coming up to a level 47.5. That is a left shoulder, that first piece of orange. Are you going to rest after the 47.5, which we think is a reasonably strong possibility? It's not the only possibility, it's a lot of many possibilities, but we think it's a reasonably strong possibility. It was a seminal first head and shoulder over here. That was the 64K run, and it performed to a target to the downside. Indeed. We think it's a reasonable possibility that you rest and you could have a pullback. Could that set up a right shoulder as a result of that pullback? Well, I don't want the pullback, so I'll be reducing leverage, staying in investment in terms of crypto, and sitting back after the 47.5. By the way, there is a possibility you could also just go moon spike strong from there. So sometimes you run a key level and you get different kinds of reaction. You get a final blow off through it and you go, huh? And then you exhaust back down and you're kind of done for a while, and then you get the progress decay and the pullback. Sometimes you die at it, just through it, 47, maybe 48, some low 48 number, maybe even a spike into 49s, then down, and you have a sustained period of pullback. And there's occasional event, you can just decide, damn it, I'm rushing, and it leads to a surge and the FOMO kicks in. By the way, that inverted head and shoulder, it's the biggest number we've ever dropped on Bitcoin, 145,000. So for those that say, Michael Saylor's right, Bitcoin's going to go up, we're not arguing the possibility that Bitcoin goes up higher. We are attacking, again, the argument. Is it fair to assume that there's one boat that has no holes and all other asset classes that can be invested in have holes? If you've already presupposed that, then the choice is very easy. You've gone to the future, you've seen the outcome, there's only one ever solution. There's never going to be a digital challenge, there's never going to be a power challenge, there's never going to be a mobile challenge. You've seen all the future, you've spoken to all the politicians, you've confirmed only grid up throughout. That's kind of amazing. We don't like arguments like that. That's called a straw man argument, when you assume all you need for you to be right. And talking about number of chairs is not a good point. Okay, so we're going back to Bitcoin just to show you one more time on the smaller level, in fact 4 hours, that target, and then we expect a 47.5 to be run and the possibility to go higher. But first, possibly a little bit of a pause here. This is going to capture all the FOMO money that will chase in after the pump. You see, people want certainty. Everyone is risk averse, even to varying degrees. You might say, I like risk. But actually, you want to buy something that's pumping because you think it's assured that it's pumping because I've seen it pumping. But you're actually paying the wrong price when you buy something that's already pumping. You're getting late into a high volatility move. You're actually increasing your risk rather than decreasing your risk. Hence why we spent all the time with these videos trying to get you to be prepared to get long before it pumps, so that you have a much tighter stop and a much earlier entry, and you've just been taken into money. BitMEX accounts are singing, crypto accounts are singing, all in the new year, earning more than people earn in months and annual nurses earn in an entire year. It should be criminal that we're able to do this, but that's the system we exist in. You too can do it. You too can do it, but don't chase the tops, don't chase the pumps. So the next level that would be a significant one is as Bitcoin runs 47, and I imagine it'll take the 47.5, given that these are not too far apart, about $500 between them, a little bit of a surge through. So you could have a little bit of a blow off. That might come after a rest and pause now for a bit. In short, you might have missed a fair amount of the action by not being long at 42.8. You're going to chase in at 45. Not a good idea, because you could pull back quite some way. There will of course be support across these tops, I would imagine at 44.3, 44.4. So there's no saying you get even down there, but it's not a great entry right now. We are discussing how it's turned out since we originally told you be long. Be ready to get long, be investment long, and be ready to get leverage long on a key volatility squeeze event. Let's do Ethereum. So the gentleman also said in question, on a basis of a rising wedge, that Ethereum would be down. Now that was 12 days ago. We're going to remove that 12 days ago. Let's put it on the daily so we can count candles. 12 days ago, it would be easier if we just had a date. As you can see right now at this point, Ethereum is higher than it's been since the bear market officially ended. So there is no way it's not higher than it was 12 days ago. We can count 12 days, but I think you'll find out you're somewhere around here, and Ethereum is working its way out. It's a beautiful, not really. It's not the best mover. It's not the fastest mover. It's a big market cap. It's moved a little bit in sympathy with Bitcoin. But right now on the daily, this is your highest daily close since the bear market ended on Ethereum. So I'm afraid, again, the answer was Ethereum and Bitcoin traded higher, not lower, as we suggested would be the potential case, on the grounds that the methodology is superior, the idea is superior. Jumping around looking at patterns on one thing, rising wedges are bad, and then RSI formulas on Bitcoin, that's bad, and thereby concluding that they're both going down. That's like not knowing what you do. If you cook in a certain way, cook in a way, make sure that way is the best way, and then continue to harvest the best possible outcomes out of it. So we think overall the heading, shocking revelation, why Bitcoin, Ethereum won't fall and will rise instead. We're going to give ourselves a pretty good tick there and accurate, but remember, we could have been wrong, and it's not about the man, it's about the idea. Okay, what other tokens have we spoken to you about? Well, there was HBAR, there was HBAR. We told you why this one is looking sexy. We also told you how ICP was a good potential buy on a short trade and then an exit. That one's done pretty well as well. Let's remove that for now. Delete it. So in terms of HBAR, what did you get? Well, we suggested to you that you had a very good upside HVF structure for one, and then on a bigger time frame. So we'll just show you that. This, of course, we discuss in the community. You can find out more about all of those ideas that get discussed in there. But this gave us a good reason to be long it, and you can see the dovetailing of those potential targets there at around 15 for the upside HVF. But we highlighted as well that if you were long this, there are a multitude of reversal patterns. This is the gift you get when you get cycle change in crypto. You get whole swing reversion from bear to bull, and this is where we are now. You need to maximize, guys. You need to maximize during this period. You need to be in the right tokens. They don't all run at the right time. You need to maximize and make sure you are getting retirement levels of gains out of this market. You've got to choose when you're long. So what are we drawing here for you? Well, again, we're going to draw nice and thick, shall we? You saw the structure as you dropped into, that's the 1, that's 0.1. That's 10 cents for Hedera Hashgraph. This was a wind up that occurred over there that was to the downside, but essentially this is your sharp, let's make that a bit fatter, make him pop. That was your sharp down leg and sharp reversion. This was your more rounded turn in the market that's now brought you back up to, you guessed it, the key 10-cent level. And that is why we now have projections that are giving you 27 cents and beyond. And remember, when you're talking about W bottoms and W tops, yes, they make their targets, but because they are wholesale cycle reversals, you should continue to make further upside after that. So there should be an element of overperformance that continues on an ongoing basis beyond the triggering event that sees it continue to go higher. So the target on a structure like a head and shoulder, a double bottom where there's a reversal implied, often continues to overperform. That would typically be expected in a real full bull market to lead to new highs. So it's not a top call. A target for a reversal is not a top call. It is the first major breathing point for a longer secular move to the upside, given that this was a very harsh bear market that brought you down, down, down. We got it on log scale. Your final high, which was in and around September 21. We're 24, guys. We're 24. Man, that's 4 years. It's not 4 years ago, but they're 4 years apart. Kind of, no, 3 years apart. That was end of 21. Of course, we are right at the beginning of 22. 24, that's a big fall. What was the high? It was around 57 cents. So if you're expected to make new highs, and often a couple of multiples on the new high, don't forget Bitcoin 69 is still 3 and a bit times the high of the 20K in 17. So this is a secular turn, but you would probably get some degree of rest. There was also pattern structure. You can see a ledge here where we've drawn the red line where you rested. So getting through that resistance, that was a real spill. You died here. I mean, this was truly when it started to get ugly. You'll remember this period. It started to get properly ugly. It pulled back, sitting on a ledge. Which way are we going? Is that a bottom? No, it is not. Spill. Major market cap decimation there. You know, you're going at one point from 20 cents right the way down. You traded at a low to 3 cents. My goodness, 20 cents to 3 and a bit cents. Not comfortable. And that was a key selling moment over there. So the W bottom is exactly the same. We've got thick, easy ground that you capitulated through that you could run very quickly through. Of course, you've got the HVF target, so I'd probably expect a little bit of a rest and pause after the running of these purple lines before making the 27s and then resting again, and then further higher and beyond. New structure, new patterns, new charts, because that's what we do. We use patterns, key levels of significance, and charts to help make sense of what we expect. And it does a better job. Hence why we're talking about 42.5 and warning that the 47.5 will be the next level. Remember, that doesn't mean it's the high. Bitcoin could run 50 and then crash to 45 and then pivot around the 47.5. That would prove the key level of significance, even though the high is 50 and the pullback is 45. They're both 2.5K odd from the 47.5. It could tighten around that and then set up its next move. Who knows? We're just telling you what we feel on balance of probability will be key levels of significance on a number of different cryptos. We also spoke about Matic. And in Matic, we spoke here about the pullback to this channel at 95 and the number 1 value. So there's a lot of similar type themes here. This also has upside HBF. So it's got an upside HBF in the right shoulder. If we go up to the bigger time frame on Matic, you'll see the orange jaw and you'll also see the red jaw. We covered this in the last video. So you're getting a lot of alts that are potentially in a stage where they are setting up for key reversals. This could mean a good year generally, particularly the first 6 months, the 9 months. Remember, the best part of the bull markets don't always last forever. And even during them, you get proper harsh slapdowns once you've done quite a bit of running. So you get too over leveraged, or you lack method, you don't know when to take back, you don't know when to roll back just to key investments, you're going to get battered. Its key thing is you want 80% of your high water mark once this entire bull is over and it's in a clear bear again. That's what you want. And you want to be protected against the sudden impact of a demand destroying event rather than max leverage, chasing the biggest number you can build in your P&L, shooting wild from the hip and swinging wild and then giving it all back and some. It's what you hold at the end of the bull market relative to your high water marker that will determine how successful you've been. If you are holding 25% of your high water mark, you were not successful. You run a count up to $10 million and you finish with 2.5. You might say, that's nice, $2.5 million. That is a major fail. It's a major fail. It's over leverage on the upside and a failure to recognize the downside and continuing to long into a bear market, and that is seeing you destroy real equity. Once you've made those profits, it becomes capital. It's not casino money. That is, you risked to earn that. It is your money. You worked. You worked in mental stress. You worked in getting the original stipend together to put into your accounts. You've got to treat it as capital. So a couple of warnings on the psychological treatment of money as well, as we are drawing a number of things. So Matic, a little bit of a rest to come back. So it's still getting its stuff together to move beyond the key one mark. It's going to probably trade down through the one level one more time, and it's probably going to form some degree of structure sitting above the 95 cent, and we'll see what goes on. It could be a falling wedge, so it could dip a little bit lower. You know, we could end up opening this up. We can't answer that question. We let the market tell us. But my suggestion is buying below the $1 mark in the 90s probably represents potentially a good entry point. What don't we? When is this head and shoulder definitely spoiled? Well, I would firstly not want to see the HVF spoiled. You can see the stop loss is 82 cents. So you would certainly at the latest want 82 cents. If you're being more aggressive, you could look at that 93.95. But remember, a falling wedge will run that low. So you could potentially look at that as a localized stop if you wanted to put a tiny bit more size. But the more you move that up, the more likely it has of being run. Any skittish behavior on the exchanges, more a chance of you getting bashed out. Okay, so what have we spoken about? We've spoken about Bitcoin and why the next big move is, in our opinion, to run the 47s and probably respect the 47.5 in some form of way that price behavior tends to do. We've spoken about the differences in takes here. That's probably that argument is done now in terms of the short term, medium term through to the Christmas New Year period that you can project out from back there. We were looking at a certain time frames chart. We weren't looking at monthly charts. We were looking at the same time frame as was being reflected by the other analyst here. We've also looked at Ethereum and we've said it's doing okay without being particularly spectacular. Let's also just remind you though, why would someone be long Ethereum? Well, we spoke about the other pair, EUR. Sometimes if you're not getting what you want on the one currency, you can also draw the pattern structure on the other, and that's what we did do. And we showed you the ETH euro and said this is in a breakout against the ETH euro structure. Go and check that legacy video where we did that. There are other lovely tokens right now in our community that we are talking that are currently breaking out and will accelerate from their stops quite quickly. Some of them are in small setups that are all part of larger setups that are part of macro setups that will give a greater multiple than even that which we've discussed on XRP with you. And you could find out which tokens those are, and they're liquid, they're big enough of market cap, and there's even been a few speculative small ones that the guys have played. ICP is an example in terms of its target. We can also just have a quick look at that one again to show you why it turns out prudent to take off as you do. How's ICP doing? We'll have a look at that. and drop it into that 4-hour time frame. And you can see falling wedge at the moment. Let's do that. Its structure performed quite nicely. Let's go on to a lower time frame. Actually, let's do the 2-hour. But it's likely to have some period of rest. So I personally closed everything. I don't have a long-term view on it. It's not like something I have any great confidence in it. We have a certain degree of, hey, that looks good for us for a trade. We're not marrying. And as a result, you take that additional profit that it gave you. Note how it made its target, and then it had a blow-off period, came down, and essentially it's created a falling wedge through that target level and is only moderately above. So had you hung on, you would have thought you were super smart there, and then down here you would have thought, damn, I'm stupid, I could have got out here, and now I'm down there. So people get washed out near the lows. However, these little hammers and these buybacks are showing that all support hasn't gone away, but this is also quite a muted rally. So I think other tokens will just make more current running. We've got others that are at this point right now. Others that are at this point right now. And I think if we go back to HBAR on the daily and weekly are currently a triggering candle. So if we just do that 3 days, let's go back to 3 days on HBAR. It is now triggering a macro pattern, and it's getting a little bit of a pushback in actual fact, a macro pattern there on the one. Let's just see, what was the high there? High 987. So long here, you're just triggering that W bottom with that surge. Possibility of a little bit of a fade back. The next move, remember about breakouts, just like we had to explain on gold and everything else. First you test and go through the level, you often get pushed back in. It's not that you're wrong, it's just that that's the first reaction. The second time, you might get pushed back some of the way, second chance, and only the third time actually go into a very fast, high momentum move. So bear that in mind. We have funnels, our projections, and our targets, how we get to those. Again, part of our course and program. Click the link below. We want to help you get wealthier utilizing crypto during the bull season, not by losing your mind and becoming married to it like it's the godsend. There's quite a possibility that many of these things are laying down the status foundation, the new monorails for your surveillance financial system. However, we'll take the profits from making the money in it, and then we will buy ourselves a better quality of life, greater freedom, etc., etc. Until next time, thank you for liking. Leave your comment of what you think will be the next alt token that's going to make a major move. You've seen something really interesting technically on a token, let us know in the comments below. Say, hey, have a look at this one. We've covered ICP for you recently, MATIC, HBAR. There's others that we're not covering that are covered in our community. We've spoken to you about Bitcoin, Ethereum. Until next time, I'll catch you later. Thank you for watching and liking, and we appreciate your support. Have a great year. This could be the year that you move to financial independence if you play your cards right during this Bitcoin bull market, and you keep at least 80% of your highest watermark, if not more. Until next time, I'll talk to you later. Bye for now.